Okay, students, thank you. We will now start our day 3. Is my audio clear to all of you? Please give me a yes. Am I audible to all of you? Okay. So, students, we will start with today's lecture. By the way, till yesterday, what all did you learn? Can I say we learned that return for a mutual fund investor is NAV 1 minus NAV 0 plus D1 the whole upon NAV 0 into 100 or into 12 by M into 100 or into 365 by days into 100 or into 1 by Y into 100. Everyone understands now all of this? And instead of per unit, can I say you can also do total NAV minus investment value plus total dividend upon investment value into 100, and that should give you the return as a percentage. Everybody clear till here? Now, moving on to the different types of plans. So the first plan was a normal dividend plan. There was one plan called as dividend reinvestment plan. There was a growth plan. There was a bonus plan. Everyone remembers everything, no? So no need to go into revision again. Yesterday only we have done. So now we pick up a question which is really frequently asked by ICEI, and it is very tricky also. So I would request everyone to be very carefully reading question number 7. Please read, everyone. Once you are done reading, please type Q7 on chat box. Okay. So students, are you ready? No, mentally you're awake, alert. It's a tricky question. Type READY on chat box and send. It looks small, but it's very tricky. I hope you are ready, alert, aware, awake. Everyone, please type READY. Okay. So now, what are they saying? Mr. X on 1/7/2000 during the initial offer of a mutual fund invested 10,000 units having a face value of 10 for each unit. Now see, be with me, listen to this carefully. On 1/7/2000, this person, can I say, purchased 10,000 units at the rate 10 rupees per unit. Okay. On 30, that means total investment value, of course, is rupees 1 lakh. On 31/3/2001, 31/3/2001, can someone tell me in how many months this is? From 1/7/2000 to 31/3/2001, how many months? 9 months. So in 9 months, students, the dividend offered by the mutual fund was 10%. So students, be here. Can I say dividend is 10%? Acha, I hope you remember it is 10% of the face value of the units. Face value is, students, 10 only. So do you all agree that the total dividend that they are wanting to give is 10,000 rupees? Give me a Y. You understood this clearly? Okay. Now, the next thing is I want you to scan the question and tell me that, see, dividend is given. So, can I say it is not a growth plan or a bonus plan? Give me why. You understood this? It is neither a growth plan nor a bonus plan. Correct? It has to be a dividend. So in dividend, students, can I see it can either be a dividend plan or it can be a dividend reinvestment plan? Everybody following, no? Can you look into the question and just see for some hints, if any? Which plan is this? Wow, you all are so smart, amazing. How did you how did you figure out it is not mentioned no anywhere dividend reinvestment and all that? Ah, do you people realize that he had bought 10,000 units, but suddenly he's saying that at the end I'm redeeming these many units? Okay. Can I, from where did you get so many units extra? That means, can I say it is a hint that this is not a normal dividend plan, it is a dividend reinvestment plan. Give me a why. Everybody understood this point here? I will give you note also on this, don't worry. Okay. So, students, can I therefore tell you this, that this dividend of 10,000 that we are talking about, you will not get only. Instead, can I say you will get new units? Is everyone there with me? Instead, you will get new units. Now, how many new units will you get? Can I say you will get new units equal to 10,000 divided by NAV of 31/3/2001? Give me a yes on chat box. The new units that you will get instead of rupees 10,000, can I say you will get it? You will get units. So what I will do is let the NAV be X. Okay. Let NAV on 31/3/2001 be X. And if you look into the question, can I say, isn't that what we are supposed to find? Everyone, are you all able to understand? This X we have to find. Till your story clear? Great. Now, before I attack the question, some data points first of all. Do you people realize that total number of units that you will have now, you already had 10,000 at the start, plus can I say you will have 10,000 divided by X. If you just open this up, can I say it will become 10,000X, okay, 10,000X plus 10,000, the whole divided by X. Is everyone clear till here? 10,000 X plus 10,000, the whole divided by X. And this I will delete and this I will place it here. Everyone clear? 100% clear? These are your total units. Now, students, how do I solve for X? The hint lies in this line. Everyone read this line, please. Mr. X is saying that on 31/3/2001, my annualized yield was 153.33%. Annualized yield is 153.33%. Okay, how do you solve this, students? You know that annualized return will be total value at end of the period minus investment value today, the whole upon investment value today into, are you comfortable with 12 by 9 into 100? Give me a Y if you understood this. Annualized yield, na? Can I say it is your investment is only for 9 months period, correct? No? So, students, now let's talk about the numbers here. Acha, why is there no plus D1? Everyone understood, na? Because that must be adjusted here because it's a dividend reinvestment plan. Okay, so I'll now push these numbers here and let's now talk about each one here. Students, you only tell me now on chat box how much is investment value. Come on, everybody. How much is investment value? You are paying attention? Yeah, investment value, can I say, is rupees 1 lakh. So I will remove this and I will write here 1 lakh. This, na? You have invested 1 lakh today. So 1 lakh I have invested. So what I will do is Just write here minus 1 lakh, the whole upon 1 lakh into 100. Now, students, let's talk about this number. Let's first of all get it clear in our heads. What is this number? Can I say this is the market value of your investment as on 31/3/2001? Correct? No? On this date. So, can I say that the market value on this date will be number of units into NAV of that date? Give me a Y if you understood this. Total number of units that you are holding multiplied by that date's NAV. Can I say will give you the total value on that date? Everyone participate. No, give me Y. You all understood this? So, how many total number of units? Can I say these are the total number of units? You have already done it. And what is the NAV on that date? Can I say NAV on that date is X? So, can I place these numbers here by saying, okay, everyone be with me, just see what I'm doing now. Can I say it is 10,000 X plus 10,000, the whole divided by X, the whole into X? Is there anyone who understood what I have done? Students, total number of units, है ना? Total number of units are these multiplied by NAV per unit will give you the total market value of your investment. Everyone participate and give me why. Did you understand this? Very good. Students, can I therefore tell you that this X and this X will get cancelled? No. Once this gets cancelled, can I say I can just remove all of this and I'll just place this entire thing back up there. Everyone clear with what I have done here? Now, students, the annualized return that they have given to you is 153.33. Okay, 153.33. So I request everybody to please take your calculators. Take 153.33 on Calci and do as I say. Into 1 lakh, into 9, 153.33 into 1 lakh into 9, divide by 100, divide by 12, plus 1 lakh, minus 10,000, divide by 10,000. How much is the value of X, please? Yeah, X values at 20.5. Very good. Students, everyone understood? So that's how you calculate the NAV as on the first date required, 31st of March 2001. I want to tell everybody it's a frequently asked question. So be very careful with how I am doing it. You also do it accordingly. So now I will show you the solution in fair. You have to write it. As we are going through the solution, we will be revising the whole thing again. Are we ready, please? Give me a Y. Okay. So I will start now. Be with me. So we are doing question number 7. And the first thing that I want to just share with you is, okay, just 1 minute. Yeah, you're able to see clearly, no, behind me, the PPT, or just the shared screen is clear? Okay. So students, now, did you all understand the first note, please? Just read. This is not a note you're supposed to write in the exam, But just for your sake, how did we know that it is a dividend reinvestment plan? Can I say the number of units increased? So we understood. Okay. Please write that note, no, everyone. All done. So first point, A, calculation of NAV on 31/3/2001. Those who joined late, now they can also pay attention. Huh? It's a small sum. You can easily read it and you follow the solution, you will understand easily. So everyone write down point number A, calculation of NAV on 31/3/2001. Calculation of NAV on 31/3/2001. Okay, so how do we calculate the NAV on 31/3/2001? So I'm going to place some data in front of you. First of all, those who came late are requested to read the first 3 lines of the textbook of the question. Read them till that 153.33. Then I'll explain. Okay, so now some facts. Everyone, first, the date of investment is 1/7/2000 and the number of units purchased, can I see, is 10,000 units at the rate 10 per unit. So your investment value on 1/7/2000 is rupees 1 lakh. Please copy. Okay. Now you invested rupees 1 lakh. Okay. Just 1 minute. Yeah. You invested rupees, what happened? You invested rupees 1 lakh. Now, students, on 31/3/2001, the mutual fund announced a dividend of 10,000. However, you also know that you will not be receiving the 10,000 because that 10,000 will get converted to units. Is everyone clear? 10,000 rupees will get converted to units. So when you convert it to units, can I see you need to divide it by the NAV on that date? But that is what exactly we don't have, no, the NAV on that date. Let's say the NAV is X. So do you agree that the new units you will receive on dividend reinvestment will be 10,000 rupees divided by X? Students, that makes your total number of units as 10,000 units plus 10,000 units, 10,000 divided by X. Everyone understood these are the original units and you have your dividend reinvested units. So that makes your total units as 10,000 X plus 10,000, the whole upon X. Correct, no? Please copy this. Students, there is some disturbance in one of that zero. I hope you realize it's a normal zero. I don't know why that small cut has come between two zeros. Okay, we'll have to remove that. Oh, I think now, I think that is an equal to sign which has just gone for a walk. The equal to sign between the 10,000 and 2001, third last line. Is everyone done? So now these units, do you realize, are the total units you have at the end of that particular period? So do you realize the value of your investment will be number of units multiplied by the NAV per unit? And in that, can I say X and X will get cancelled, and what will be left is only 10,000 X plus 10,000. This is the value of your investment, V1. Please copy. Oh, okay, sorry. Just 1 minute. Yeah. Yashas, are you done? Okay, all right. Please copy till your value of investment. Done? Okay. Now, students, we will now invoke that data that is given to us, that the annualized return is 153.3%. So can I say 153.3% will be total value of investment at the end of the year minus investment value 1 lakh, the whole upon 1 lakh into 12 by 9 by 100. And when you solve this, you get X as 20.5. Please complete. We have already discussed all of this. You have to just write it down now. Done? Okay, students. So now let's go back to the discussion. Just 1 minute. All right. So everybody focus. So I'll remove this now. And one extra information before I go ahead. Can I say the new units that you were supposed to receive, can I say was 10,000 divided by X? No. So it will be 10,000 divided by 20.5. I will take the calculator. 10,000 divided by 20.5 equal to 487.8 units you will get new. So the total units on 31/3/2001 will be 10,487.8. Give me a Y. You understood this? Additional units that you're getting. Okay. 10,487.8. All right. Now I'll move ahead. The next thing that they're asking you is NAV on 31/3/2002. Okay, the next thing they're asking is NAV on 31/3/2002. Students, there is this printing mistake from ICEI. It is still there in ICEI, this printing mistake. You please do convert it to 31st of March 2002. I kept it on purpose because just in case the question comes as it is now, you should know that there is a typing error in ICEI itself. So that is why I will change it now for you. 31st of March 2002. Did you do it? Is the correction done? Acha, you will be having PDF now. Then you write it somewhere in the notebook only. Line number 3, cancel 31/12/2002 and instead write 31/3/2002. Is everyone ready? Okay. So these people are saying on 31/3/2002, the exact date of which NAV you have to find, can I say 20% of dividend was given? Hey students, do you agree that 20% dividend will now be given on the face value of these units? Correct, no? So the number of the face value, can I say, is 1,04,878, 10 rupees, no? And on the basis of this, do you people realize 20% if you calculate? Can you please give me how much is the dividend? Yeah, 20,976. So that is 1,04,878 into 20%. 20,976 is the dividend. But will you be receiving the dividend? The answer is no, sir. We will not be receiving. Instead, we will be receiving new units. Students, new units, can I say you will receive by reinvesting this as on the NAV of this date? Everyone clear? So let's say the NAV of that date, do you realize, is X? So these become your new units. Everyone following till here? Can I go ahead? Now, how do I crack this now? Students, here they have not given to me a data like this which we could use and create an equation and find out the answer. Then how do we find here? The hint lies in the next line. Read this line, please. Everyone read it? Students, anyone in the class can tell me what is the hint? The hint is that when this dividend you received, this one, can I say your number of units had gone to this? Oh, from here it has jumped to here. I hope you people realize there was no dividend in this year. So that means this dividend only must have pushed it. No, I hope everybody is able to understand. This 20% dividend only must have pushed my units from 10,487 to 11,296. So can you tell me 11,296.11 minus 10,487.8, how many new units you received? Can I say the new units you received was 808.31? Hey students, are you convinced of the fact that these new units you must have received in this dividend only? So here, can I say when this dividend was announced to you, you said, okay, this dividend will be reinvested at the NAV on that date. I don't know what is the NAV as on that date, but I know one thing, that the additional units I received on that day was 808.31. I think very easily we can crack this and find X. Can you give me the value of X, please? That is the value of the NAV on 31/3/2002. 25.95. Very good. 25.95 rupees. Everyone ready? 25.95 rupees. Clear? So students, that's how you calculate. So the pattern for calculating NAV here and the pattern for calculating NAV here, can I say, was different. Here you use the annualized return logic because they gave you that. And here you found, here you understood that there were some new units received. Through that you were able to find. Okay. So I will now show you the solution, and during the solution, you can just get a small revision of this particular concept. Okay, be with me everyone. So let's start. So calculation of NAV on 31/3/2002. For that, first of all, can I say the dividend that you will be receiving? So just 1 minute. There is one line missing somewhere. Okay, students, do one thing. In your notebooks, first of all, um, there is some missing line. Okay, do one thing. I'll dictate something. Write down point number B, give heading. Point number B, give heading. Write down new units received on 31/3/2001. New units received on 31/3/2001. New units received on 31/3/2001 equal to 10,000 divided by 20.5. 10,000 divided by 20.5, which is equal to 487.8. 487.8. Therefore, total units equal to 10,000 units plus 487.8 units equal to 10,487.8. Everyone understood till here? So now we can start doing. Dividend received on 31/3/2002, can I say, will be 20,976? But that dividend we will not get. We will reinvest it at the NAV on that date. Let the NAV be X. So you will be so the new units you will be receiving is 20,976. Students, I request all to read this note, please. Everyone understood the note? Then give me a Y. Okay. So new units received, can I say, on dividend reinvestment must have been 808.31 from 10,487 to 11,296. So you know that the new units received are 20,976 divided by X. I equate it to 808.31 and I get the NAV on 31/3/2002. Okay, please copy. Is everyone done? Anybody wants me to W? Okay. So with that, we finish the second part of this question. And the second part, which said which asked us to calculate the NAV on 31/3/2002. Correct? All right. Now the last part. Last part is most simple. Be with me. They are asking you to also calculate NAV on 31st of March 2003. Now students, 31st March 2003, for that only one data is given. They are saying annualized yield was 73.52%. Can someone first of all tell me annualized means, can I say it is a 12-month return, but your holding period was how many months? Can you please count? See, I think from 2000 to 2001, there were 9 months. And from 2001 to 2003, there will be 24 months. Can I say 33 months a total holding period? Everyone clear with this? 33 months, all clear? Can I say annualized return again given? Similarly, I'll have to use that annualized return formula. AR is equal to total value at the end minus investment value, the whole upon investment value into, as you know, 12/33 into 100. Give me a Y. Understood the equation? Okay, you invested initially 1 lakh in the fund. Okay, and the fund is saying over a period of 33 months, the 12-month annualized return is 73.52. So now how do I find the total value here? Very simple, students. Let's say that the NAV on this date is X. So if the NAV on this date is X, can I say the total value of your investment will be 11,296.11X? Give me a yes if you understood this. Nothing great. You already know how many units you have. There was no further dividend, reinvestment, nothing. That this is the number of units, 11,296.11, and each unit I'm assuming has a market value NAV of X. So I just place it here. I think it can easily solve X. Can you do the calculation and give me X, please? Sana, thank you. 26.75. Everyone, please check. Are you getting these numbers? Sorry. Is everyone done? Okay. So if you all are done, we will now write further. Okay, investment value 1 lakh, period of holding 33 months. Let the NAV on last day be X. So the total value of the fund will be 11,296.11X. Annualized yield given, I put it in the formula and I get X. Okay, that is the NAV on 31/3/2003. Please copy it down. All done? Anybody wants me to W? Okay, students. So the good news now is finally we have finished our first module together. Did you all understand the first module, calculation of return for an investor? I'm very happy that we were able to sail through together initially first. Students, now you know now what is your task at hand. Will you commit that you will do it? How many sums are there? 1, 2, 8, 9, 3, 4, 5, 6, 7, 8. Students, 8 sums, which I want you to practice. In fact, some of you now, when you look at these questions, you will realize, hey, it is very some of them are similar, some of them are new. Something or the other new you will find. That is why I've kept it. Repetitions I've tried to avoid as much as possible. Sometimes here and there some repetitions might come. Otherwise, it's all you'll find new questions. But that's what it takes students to get that 90 plus score. I'm telling you now from experience. Please follow it. Okay. And so what can we keep a deadline for this? Today is 15th of April. You only tell me. 8 questions, how many days you want? Nobody is picking up. That means you are saying you will not do. Like that, no? Like that you will do with me. Yeah, I also felt the same, that if you can simply manage 4 questions in a day, it's not a big deal here, come on. 4 questions in a day, 2 days should be enough. What do you think? Everyone, do you agree? Because we have to do time bound also, no? We cannot just, our whole AFM is only for around 2 months, 10 days. So yeah, so by tomorrow evening, which means 16th, basically 17th when you come to class, you should be ready with these 8. I will, however, tell you with experience that out of the total, there is only a 10% class which actually does the hard work consistently. And it is these 10% only who score huge. Now it is up to you that you want to be in the 90% or you want to be in the 10%. I personally feel that if you're attending normal lectures, you will still get a 60 plus in FM, 50 or 60 plus in AFM, I'm telling you, if you attend sincerely. But who wants 50, 60? You have not come for that year. We want to strike it big. Unless the paper is something like how Jan 26 came, where they only decided to screw everyone in AFM, then can't help, because then getting a 60, 70 only is like getting 90. But at the same time, at least, but then in such type of papers, I want you to get those 60, 70 when everyone else is in their 20s and 30s. So that is there. But we are assuming that it's a paper where ICEI is not deliberately trying to screw. So in those paper, students, easily you can get 70 plus, 80 plus, and if you have studied very nicely, you can get 90 plus. But for that, students, you will have to do this practice plus. So now, you remember I told you that you should have another notebook of practice plus. What you should do is, you should start practicing these 8 questions not in rough. Do it properly. Are you all able to understand? See, do it properly without seeing the solution. And please listen to me. Do it properly without seeing the solution, and whatever mistakes you do now, note it. Mistakes you will come to know only after you see the solution. Mistake you do, note it, highlight it, mark it with some other pen, correct it there, and so that next time when you are self-reading, no, you're revising, no, you don't need to go through everything just audit. But whichever part you have done those markings, can I say that only you have to pay attention to. Otherwise, students, second reading will be as long and frustrating as the first. Don't do that. So can I assume that you will be making a new notebook and doing it properly? Okay, thank you so much for your participation. So on 17th, no, I will make that WhatsApp group amongst all of us. Okay. And on 17th, you can then tell me that amongst these 8 questions, for which one you need my assistance. Then I'll place one evening 9 p.m. lecture for all of you. Whoever wants to come can come. and I will discuss those questions with you, whichever ones you were facing trouble in. Everyone clear? And that recording also, I will give it to you. So in case you're not. But 9 p.m. I feel everyone should be home now by then, hopefully. So you can please join at that time. Okay. I'll be happy to see you if you're able to come. Because see, if I'm putting extra effort, no, I need someone to match. If there is nobody, then how should we continue? No? Like that it happens. I will do it, of course, but if you will come, it will be great. Okay. Because you are only asking now for that question. So if you are only not there, then I'll feel lost. So you please do come and we will do it. Okay. All right. So students, we are now going to go for module 2. Are we ready? Give me a RADY. Ladies and gentlemen, you are absolutely ready for this. Okay. Students, good news about this module is, see, okay, use your brains and tell me, earlier module, rate of return. Can you tell me, we were doing that module as an investor point of view, or we were doing a module from the mutual fund company point of view? Investor point of view. Very good. Can I say we were calculating the rate of return for an investor? No. That he invested NAV 0, he went to NAV 1, he got dividend, he got units, he or she, whatever. Can I say we were seeing from investor point of view? Now students, this module is from MF point of view. Everybody understood? And you know what we have to do from MF point of view? I hope you understood what is the job profile here. Everyone give me a Y. Understood module 2, what it is all about? In module 1, can I say we were given the NAVs? Now we have to calculate the NAVs. And the good news is the formula of calculating NAV I already taught you. Everyone remembers market value of assets held by mutual fund minus external liabilities, the whole divided by number of units. Hey, give me why. You remember, no, this? Now this formula, I hope you people know, is not done by investors. Na? This formula is done by the mutual fund house. Everyone clear? So therefore, we will be now going into the shoes of the mutual fund and figuring out how they are calculating NAV. Everyone clear? And this is the very NAV that module 1 uses for calculating the returns. NAV1, NAV0. Can I say as the market value of assets held by the fund keeps changing, can I say NAVs also keep changing? Okay. Are we ready? So do one thing, no? Write down in the note. Everyone is given heading, or heading is yet to be given? So in the notebooks, write down M2 or module 2, calculation of NAV. Calculation of NAV. Bracket mutual fund POV. Calculation of NAV, bracket mutual fund POV. And you can just copy this formula. I think this formula was written in the introduction also. I'm not very sure. I think I had given it. Just check once. You want to write again? Write again, no problem. Are we done? Okay. Requesting all to read question 16. Read carefully. If you're done reading question 16, please type Q16 on calculator. I am sorry, on chat box. You must be searching where is Q on Calci. Okay. All done? Okay. So, students, I'll now start. Cinderella Mutual Fund has the following assets in scheme Rudolph at the close of business hours on 31st March 2014. Okay. So students, you remember I used to show you the balance sheet. Here there were assets, here there were units, and here there were external liabilities. Now in assets, the shares are given to you. Is everyone paying attention? I want to teach this to you on calculator. Take your calculator. Do this into this and press M plus. Do this into this, press M plus. Like that you do keep pressing M plus, M plus, M plus, M plus and give me MRC how much it is. 42 lakh, no, 4 crore 20 lakh 20,000, like that. 4 crore 20 lakh 20,000. Okay, everybody got this? Do you agree that these are the market value of assets? I'll repeat. Cinderella Mutual Fund. Okay, Harshita, you imagine that you are the investor in this fund. Okay, you gave money to the fund. What is the fund doing? The fund is taking your money and, can I say, putting it in different shares, correct? Now, in these many shares, can I say the company has bought, and these are the market prices of each share. Do you therefore realize when I multiply this by this, this by this, this by this, I will get the market value of the total shares that the mutual fund is holding, and the total comes to this. Harshita, is it clear? Everyone else understood? Okay. Check if you're getting this number. Now, I want you to read this line. The scheme Rudolph has accrued expenses and other liabilities. Oh my God. What are these, students? These are, can I say, external liabilities. 4,50,000. Give me a Y. Understood this? External liabilities 4,50,000. And they are saying the number of units are 10 lakh. Number of units are 10 lakh. You know how to calculate NAV, no? Come on, one of the most simplest questions, as simple as it can get. What will you do? This minus this, the whole divided by this. Correct, no? 41.57. Okay, thank you so much. 41.57. Everybody pakka understood? Yashas, no. Okay, 41.57. All right. So, students, come here. Question 16. Simple calculation. Oh, sorry, 1 minute. Yeah. Simple calculation. Look at the screen. This is how you present it. Market value of assets. Okay. Market value of assets. Understood this whole thing till here? Minus external liabilities. Can I say accrued expenses, other liabilities, total liabilities, net assets, divide by number of units, NAV. Give me a Y. Understood the whole presentation? Neat and clean. Okay. All right. Start, please. Complete it. If anyone is struggling with any number, anything, anyone wants me to repeat, please don't feel shy. Please ask. Is everyone done? Okay. Harshini, let me know once done. Done? Very good. So, students, we will now go to the next question. The next question, students, is a frequently asked question. Question number 17. Take your time and read it carefully. Once you're done reading now, always remember, just send Q17. Otherwise, I'll keep waiting. Okay, are we ready then? Thank you. So, question 17, very, very, very frequently asked. Just 1 minute, 1 minute. Okay, ready? So, based on the following information, determine the NAV of a regular income scheme on a per unit basis. Is everyone ready? Now, what are they saying? They're asking you to find NAV. NAV is, of course, on per unit basis. Okay. Let's see if you're able to grasp this. These are assets, 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 and assets held by the fund. These are liabilities, liabilities of the fund, and these are your number of units. Give me a Y if you understood this. So I simply need to find market value of assets minus these liabilities, divide by number of units, game over. Correct, no? 8 mark question this is. Let's take it slowly. First of all, how do I find market value of shares? Okay, not a big deal. Be with me. I request everyone to please read these two rows. Take your time. Done? So they are saying that when you purchased no cost, the index was 1000 points. Today, the Sensex or the Nifty has gone up to 2300 points. So, can I say simultaneously these also must have increased? I hope everybody is able to understand. So, when it was 1000, no, I'm sorry, when it was 1000, na, you had invested 20 crore. So, now if it has become 2300, it will have grown, it must have grown to how much? Very good, 46 crore. Give me a why. Everyone understood this? 46 crore must be the value of the shares. So I will write here 46 crores. Now students, actually, if you think little deep, this might not be a very accurate representation of what the market value must have gone to, because this is the index. So we are assuming that how the index has gone up, similarly our portfolio has also gone up. Is everyone clear? This is an assumption because there is no further data given about which shares they have bought, what is the market price, nothing is given. No? This is the only thing given. Can I go ahead, please? Next, students, cash in hand. Nothing to touch here. I hope you realize market value, book value of cash will be same only. Give me a Y. Next, bonds and debentures. So students, right now we put a cross here because I'll have to bifurcate the bonds and debentures into two parts. As you all have read, there is something which is not listed and therefore there will be something which is listed. So I would like to write like this: listed bonds, unlisted bonds. Comfortable? Listed bonds, unlisted bonds. Okay, students, read this. No calculation needed. Everybody understood 8 crores. Can I go ahead? Unlisted bonds. By the way, unlisted bonds, can I say cost was 1 crore? Remember this. And now read this. Are you comfortable when I write 0.8? Give me a very good. Understood everybody? 0.8 crores, 80 lakhs, 1 crore minus 20%. Got it? Now, students, there is a controversy. Let me explain. I request everybody to please read other fixed income security. So they are saying apart from bonds, no, we have other securities also. And read this. Everyone read it? So now these people are saying that the face value, if it is 100, no, market value has become 106.5. Can I say the cost at which I have bought, can I say is 4.5? So listen, if cost is 100, market value is 106.5. Can I say if my cost is 4.5, it's basic cross multiplication. Everybody understood? Either you cross multiply like that or just add 6.5%. No, I hope you're understanding. It is 6.5% above the cost. So 4.5 plus 6.5% comes to some number. How much is that number coming to? 4.79. Okay, 4.79. Now I want to tell you two things. You have to be very carefully listening to me. Point number one. Can I say in this calculation, no, I have assumed that my cost price is same as face value. Is anyone in the class understanding what I'm trying to communicate? I have assumed that, see, when I told you 100 rupees face value became 106.5. Oh, so my 4.5 cost became how much? When I'm doing this, can I say I'm assuming that my cost, I purchased the fixed interest securities at par. Give me a Y. Did you understand this? I'm equating these two, no? I'm saying these are the same things. So that is an assumption, but can I say we cannot anyways do anything about it? There is no data further. Point number one clear, right? Point number two, now comes the controversy. This what I told you is not controversial. It is okay. Just like this was a slight assumption based valuation, the same goes for this also. The controversy, however, comes here. Read the last line. Oh, because of this line, ICAI removed 4.79 and wrote 4.5. According to me, I'll tell you what has happened. These people, while making the question, forgot that there is a data given for the realizable, for the fixed income securities. They forgot and they gave a contradicting data. They said that other fixed interest securities, no, you take at cost. Now, students, how can there be two market values of the same asset? See, here when they are saying no, that take it at cost means they are saying that the market value is continuing to remain at 4.5, nothing changes. That is what they are saying here. But here, can I say they meant something else? I hope everyone is paying attention. Students, I on purpose kept this question because it is frequently asked. Don't debate ICAI. And they said, no, take it at cost, game over. Which means these people have completely ignored this line. Is everyone paying attention? However, they are also smart enough, they know this, and there has been a question asked in the past. I've put it in the practice plus, don't worry, where a similar question was asked, everything same data, this line was not given, then they have taken 4.79 that I taught you some time back. Is everyone able to understand? So I think some doubt must have crept in your mind, sir. What if that line is not given? If not given, then do this. I'm telling you, ICE has done it. Okay. So I will give you a note on this at the end of the question. What to do if this line is not given? Everybody comfortable? But if this line is given, I'll take 4.5. No controversy here. Move on. Hey, everyone is not giving why. Everyone understood, no? Clear? Okay. Thank you. Done. So these are market value of assets still here. A dividend accrued, can I say that's a normal book value? Market value of dividend accrued will be same only. And can I say we subtract the liabilities, these only? Can I say that total we will divide by number of units, and I think we should be able to get NAV easily. Everybody understood the question? Give me why. Everyone understood the question clearly? Now one mistake you can do in the exam. Remember these numbers that you are doing are in crores, and ICAI has very intelligently put the number of units in lakhs. You will have to convert this to 0.2 crores. I hope everybody heard me. Students, everyone understood what I'm trying to say? Otherwise, if you divide this by 20, your NAV will become wrong. 2 decimals wrong, it will happen. You have to do 0.2 crores. Or you convert these 2 lakhs, whatever. But make sure there is uniformity, okay? Okay, so students, here comes the solution. And just first of all, see the solution so that you are able to revise it. Market value of assets, be with me. Listed shares, remember the calculation. Cash, remember the calculation. Listed bonds given. Unlisted bonds, 20% diminution. Other fixed interest securities, they told take at cost, I'm taking at cost, I'm putting a star there, I'll give you a note below. Dividends accrued, given. That gives you total market value of assets. Okay? Minus market value, minus the external liabilities. There are 2 external liability students. We will subtract those, and that will give you your net assets. Divide by number of units, 0.2 crores, and that gives you NAV. Everyone understood? And I'm giving you one note here. Please check this note. Let me know if the note is clear. Give me a Y if understood. Okay, thank you so much. So we will start copying this now. Start, please. All done. Anybody wants me to W? Shweta, let me know once done, okay? Okay. Everyone done? All right. Can we go to the next one, please? Chalo. So, before I go ahead, first of all, tell me, are you enjoying the chapter? You should tell me why. Why means give me just why. Are you comfortable, enjoying, understanding AFM, feeling excited to do this subject, wanting to score more and high, so that your probability of clearing slash rank slash top 3 ranks, you never know. Hmm? Okay. You want the note? Yeah. I'll show you the note here only. Take. Okay. Also, students, especially from the south of India, I request all of you to please spread the word. Um, I'm doing this purely English batch, which suits many of your needs. If you have friends who would be wanting to benefit from this, you could please inform them. I'll be grateful. Okay. All right. So now, students, coming to question number 18. Oh, very nice question. Read it very carefully. Please read it carefully. Question number 18. Ready, everyone? Are we done with the question? Can I start? Okay. A mutual fund made an issue of 10 lakh units of 10 each on January 1, 2008. No entry load was charged. Okay, students, we'll do one thing. Come with me. Um, Wait. Okay, students, I will teach you this. Let me teach you entry load versus exit load. Everyone ready? General knowledge. Are we there? Okay. So what used to happen, no? When you are purchasing a mutual fund, okay, open-ended mutual fund directly from the mutual fund, whether you purchase it during NFO or later, whenever. Can I say open-ended means anytime you can purchase directly from the fund, no? So if the NAV is, let's say, 22 rupees when you are buying it, no? These people used to charge you 22.5 or 22.7, and they used to say the extra money that we are asking you is called as the entry load. Oh, but in your books The NAV used to appear as 22 only, but you were paying them, can I say, zero point 0.5 or zero point 0.7 extra, which was not being counted as your investment. Everyone, first of all, understood this? You are paying 22.5, but they will say, no, no, we received only 22. Zero point 0.5 extra is like the income of the mutual fund. Everybody got it, no? Just one minute. So generally, if you pay 22.5, you will expect na, that your investment now starts growing from 22.5. No, it will grow from 22 because 0.5 was the charges by the mutual fund. Okay. Such charges, why were they charging you? They were saying so many ads we run to reach you, so much magajmari we do to come to you and attract your money so that your money comes to us. Please help us in reimbursing those initial expenses, preliminary expenses that we incurred to just acquire you as a customer, that you only pay. You understood this? They are basically, it's their business, but they are making you only pay for their expenses. Like that it happened. Such charges, students, were called as entry loads. Is everyone clear? However, However, as India started progressing in the last 2 decades, not 2 decades exactly, but maybe a decade and a half, students, SEBI, I don't remember the exact date now, but SEBI, somewhere in 2014, okay, banned entry load. I hope everybody is able to understand. SEBI has banned entry load as of now. However, it is not banned in ICEI. Everyone clear, no? In real world, SEBI has said no entry load, which means if the customer is supposed to pay 22, he or she will pay 22 only. How dare you charge 0.5 from them extra? Give me a why you understood no entry load. Now comes, hey, anyone has any doubt in entry load? All clear, no? Everyone please type no, why? Okay. Now what is the meaning of exit load? Let's say you entered and the NAV became 30. Now you want to quit. Quit means, can I say, you will sell your units back to the mutual fund and you are expecting a 30 to come home. 29.5 will come home. I hope everybody understood what is exit load. Give me why. Now you will say, the mutual fund, now why are you charging me? So mutual fund says, see, I had so many plans. I had thought that I will take your money and I will invest in this manner, so that and my planning was supposed to fructify into great returns. But before that only you are leaving. Oh, the returns which I wanted to give you, that you will not get, and therefore you will go outside and tell everybody that you are earning less return. But you should have waited, no? I want you to wait. That is why I'm discouraging you from going out. That is why I'm charging you something if you go out like this midway. Now, students, in a fund which is eternal, there is open-ended, it's not close-ended like 10 year or something. It's eternal, going concern, like an equity. Can I say the mutual fund manager always will have plans? There should be some time, no, that you should allow me to exit free of cost. How much time should I wait for you? I hope everybody is able to understand. So that these people are not doing. They're saying, no, anytime you go out now, we will charge exit load. So SEBI has again put hammer on them. They said nothing doing. You tell the investor at the start only, when the person is entering. Students, this is why they say, read the offer documents carefully before investing. When the investor is investing in the offer document only, you should write that if you are leaving in 1 year, then this much load I will charge from you. Or if you're leaving in 6 months, this much load I will charge from you. The mutual fund house is free to set this period for themselves. That SEBI is not mandating. I hope everyone is able to understand. But the only thing SEBI is telling is, you tell the investors clearly at the start only that if they want to exit the fund without paying any exit load, then how many months or how many years they should be invested in the fund, that should be given clarity about. So students, exit load is not banned, but exit load is regulated and communicated more clearly with transparency. I hope everyone understood that, okay, we will charge you an exit load if you leave the fund within this period. If you stay in the fund for more than that period, then when you are quitting, we will not charge you exit loads. In fact, some funds are so transparent and nice that in fact sometimes many people don't read these offer documents. They purchase it, but when they are quitting, if when they are selling their share units, if they happen to fall within that period, no, during the sale only the website will tell you, hey, listen, because you are selling in this period, you are entitled to an exit load. If you don't want to pay exit load, pay wait for these many months more and then sell. Like that also they do. I hope everyone understood the transparency and what SEBI is wanting and what is exit load. Everything clear? Can I go ahead? You people are not giving me good why. Huh? I'm telling you all these things, but nobody is responding. Okay, thank you, thank you. All right. So, students, now that you all have understood this, let's come back to the question. All right. Students, wow, no entry load was charged. Everything clear, which means the entire 1 crore, can I say, was invested in the assets. Okay, moving on. Students, what did the mutual fund do with the 1 crore? Can I say purchased assets worth 98,000? Now, are you having the understanding here to see that the mutual fund has purchased not only shares but also debt instruments like government securities, debentures, etc. Such fund, students, are called as hybrid funds. Okay, general knowledge. They are called as hybrid funds where they mix it up and invest. I'll give you more general knowledge on this right now. Within hybrid fund, students, there are 4 types of hybrid funds. Know this, huh? Because you never know which one would suit you. First, students, is called as, okay, a conservative hybrid fund. This is not your academics, huh? Just giving you general knowledge. Conservative hybrid fund, no. Conservative hybrid fund invests around 10 to 20% of your money in equity and balance in debt. Can you now tell me why it is called as conservative hybrid? Because a very small portion, can I say, is invested in equity, remaining, can I say, is put in debt. Everyone clear? Then there is, students, a moderate hybrid. Okay, a moderate hybrid invests around 40 to 60% in equity, depending on fund manager's judgment, and balance in debt. Everybody clear? And then, students, there is an aggressive hybrid. Aggressive hybrid means they will put 10 to 20% in debt and balance, can I say, they will put in equity. Is everyone clear with aggressive hybrid, moderate hybrid, and conservative hybrid? Then there is the fourth one called as balanced advantage funds. Now, what is balanced advantage? The fund manager does not specify any range of what will go in equity and debt. They say, you leave it to us. Depending on market conditions, we will keep switching and rebalancing. Give me a why. You understood this? Just 1 minute. Huh? My PC got stuck. Yeah. Yeah, I think I got your why. Everyone got it, no? So, students, I want to tell you something. Just personal advice in case you want it. If you are having some lump sum amount with you, or your parents might be wanting to do this, and you want to invest for a period of, let's say, 3 to 5 years, lump sum, okay, invest and leave it. Can I say pure equity becomes slightly dangerous because 3 to 5 years is very short. One should, if you are having a horizon of, general rule, 7 years and above, na, only then one should put in equity. Otherwise, students, you should I keep it in FD or safe funds, debt funds, completely debt funds like that. Now, 3 to 5, can I say, is a very tricky period because it's neither too short nor too long. Huh? So I would, so generally what people would do, they would invest in FD, na, very safe. I would tell you that if you have little bit inkling towards taking little risk, no, this is a very good product. It eventually over a long term of 3 to 5 years will give you more than FD, assuming the equity at least performs little good. I hope you're understanding. And not, it's not as dead as a debt fund, nor is it as dynamic as a equity fund. Correct? It gives you safety, but just tickles a little bit of your risk appetite by putting little bit money in equity. It gives you good returns like 8-9% it gives, as compared to 7% of FD. Okay, but still, I'm not telling anyone to drop everything. FD is a great product, but one just saying that in case in future maybe you become chartered accountants and you have lump sums with you, and you want to invest, but not, sir, why would we have a time horizon of only 3 to 5 years? Why not longer? Arey Baba, because in 3 to 5 years, maybe you want to buy a car. You understand, na? You might be having some financial goals in your life that I want this money in the next 3 to 5 years. See, retirement goals and all, can I say, those are long-term goals, but you will always have some short-term to middle-term goals. This is a brilliant product for that. Everyone understood this? Give me a why. Okay. Thank you for participating. I will now move on. Chalo. So I will now clear the deck and I'll go ahead. So students, again, coming back, can I say 98 lakh I'm sorry, 1 crore rupees it raised, and can I say 98 lakh rupees it invested? You know? During the year, the share gave 12 lakh rupees dividend to the mutual fund. Huh? The shares, sorry, gave 12 lakh rupees dividend to the mutual fund. And all the three debts, can I say, gave their respective interests. Everyone clear? At the end of the year, the shares and debentures were having such a market value, and other investments were at par. Find out the NAV given that operating expenses paid during the year amount to rupees 5 lakh. This last line we will read later. Be with me, everybody. I want to teach this to you. See, do you all agree that in this question there are 4 assets? Give me a yes. Students, there is a fifth hidden asset. Can someone tell me which is that one? Generally, you take, very good. Can I say cash? Very, very good. Everyone give me cash on chat box. Did you understand what I'm telling you? Everyone clear? Okay. Now, if you have scanned the question, there is no liability. Okay. So it is just the market value of assets divided by number of units will give you NAV. Give me why. Okay. Now I want you to start doing something on your own on calculator. Read from here to here and try in rough getting me these 4 market values. I'll just fill my water bottle and come. You get me these 4 numbers, please. Students, no answers. You are trying, no? Just give me a Y on chat box. You're trying, no, at least. Okay, so I'll wait now for you. I hope I'm not sitting doing nothing and you're also doing nothing. Like that, it is not happening, no? I hope you all are trying. Students, just for my satisfaction, give me a W if you really want me to wait. Otherwise, I'll start. Okay. Harshita, yes. Basically the same thing. Huh? At par means these numbers only you would have taken. Okay, so students, everyone is giving different answers. Some is 1595, 1575, 159, 1562. Very good. Diversity. Very nice. So students, first of all, let's complete the easy ones. So they are saying that the other investments are at par. Which other investments? Apart from equity and 10% debentures, the other two are at par. I hope you at least got this. Give me a Y. Arshita, very good. Brilliant. You reached quite ahead. Very nice. But right now, everyone, just tell me these two numbers you all understood? Okay, now let's talk about debentures. Students, they are saying debentures are quoted at 90% of face value. Students, 90% of face value means, are you comfortable when I write 4,50,000? Give me a Y. 5 lakh, huh? 90%. And equity shares are quoted at 175% of face value. Can you tell me how much is this now? Here, majority people make mistake. What will come here? Nobody is answering. Okay, so if it is 175% of face value, students, it is not 175% of 160. It is 175% of 100. Everybody comfortable till here? And 175% of 100 means 175 rupees is the market value, which means you purchased it at 160. I know, but now the market value has become 175. Sir, I took 175% of 160. That will be wrong. Don't take 175% of 80 lakh. Students, 80 lakh is not the face value. Face value is 50 lakh. Give me a Y. Are you understanding what I'm saying? Face value is 50 lakhs. Or you can say face value per share is 100. So 100, 175%. Can I say market value is 175? 175 into 50,000. How much is it coming to? 175 into 50,000. Please give me the number. Students, am I audible? Okay, 87 lakh 50,000. You all are not getting the number. Kya? Nobody is answering. Everyone got it. Okay, thank you. I'm getting your numbers now. Either you do 50,000 into 175 or you do 50 lakh into 175%, no problem. Face value is 175%, same answer. Everybody please give me Y on chat box. I'm not understanding whether you understood or not. All pakka understood? Great. Now what is left is, can I say cash? And this is the tricky part here, okay? How do I calculate cash? Students, let me see if you are able to understand what I am doing. Everybody take 1 crore on Kelsey. Can I say this was opening cash? Give me why. 1 crore came in the company. Now type 98 lakh and press M minus. Why M minus? Because do you realize that 98 lakh, can I say, went into all of these assets, no? So mentally, can I say, you know that your cash right now is 2 lakh rupees. Give me a why. Okay. Now in that cash, something happened. What happened? Can I say you got dividend 12 lakh M plus. I hope you're understanding. 12 lakh M plus. Then what happened? Sir, I got 3 types of interests also. So do this. 8 lakh into 7% M plus. 5 lakh into 9% M plus. 5 lakh into 10% M plus. Don't do MRC, huh? Just first of all get these 3 inside the bucket. Are we ready? And then at the end, can I say you paid some operating expenses for your mutual fund management of rupees 5 lakh. So 5 lakh will happen M minus. 5 lakh M minus. And now do MRC and tell me how much cash is left at the end. How much cash left at the end? Students, don't wait for each other and tell the answer. Right to right, wrong to wrong. Don't do. Yeah, this is the right answer. 10 lakh 51,000. Are you getting this? 10 lakh 51,000. What all came in 1055? 1 crore came, 98 lakh went, dividend, interest, operating expense. Can I say like that? Last 10 lakh 51,000 was left. So can someone now tell me what is the total market value of the assets held by the fund? So it is 1 crore 15 lakh 51,000. Very good. 1 crore 15 lakh 51,000. Pakka understood? And that, can I say, when you divide by how many units? 10 lakh units. Do you people realize you should be able to get your NAV as 11.55? Confirm, question clear? I will tell you about the last line after this. We'll first complete this much part first. We will do it later. This is also. Also means, Sahana, this is basically another point number 2, like that. First, we have to find the NAV normally. And then they are saying, okay, again find the NAV if the mutual fund did blah, 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 blah. That is second part, okay? All right, so we will now start the solution. Be with me. Students, you can start. Yeah, okay, just do one thing. Look at the whole thing. Everyone understood now? 175 rupees is the equity share price. Government securities at par, 9% debentures at par, 10% debentures at 90%, and cash, can I say I'll give you a working note, okay? And total will give you 1 crore 1551 minus external liabilities nothing. Net assets, can I say, comes to this much. Divide by number of units. This is the solution, okay? Please copy it down. Can I go to the next slide? Wait, okay. Okay. Students, this last one, star, please mark. 175% of 100. Are we done? Okay. So the calculation of cash, please. We had an opening cash of 2 lakh. Dividends received, interest received on 3 securities, and operating expenses paid. Closing cash. 98 lakh was. Gaurav, you don't need the calculation of cash on calculator, na? Just add, minus, minus. That's it, simple. Or one shot, if you want to do, use M plus M plus M plus M plus MRC. Nothing great. I did not teach any trick. Harshita, your doubt I don't understand. 98 lakh was NAV 0 or was it 1 crore? I did not understand your doubt. 1 crore was the cash they raised and 98 lakh rupees they invested in shares, no? And bonds. So 2 lakh became opening cash, na? And from there all of this stuff started. Do you want anything else? Okay. Is everyone done? Okay. So now comes the last part. Everyone please read, no? What are they saying in the last part? And tell me how much dividend are they planning to distribute now? Mutual fund is planning to distribute how much dividend? 0.8 per unit, no? 0.8 per unit means on 10 lakh units, can I say 8 lakh rupees dividend they want to distribute? Give me a why. You understood this? So if 8 lakh rupees dividend they want to distribute, do you people agree that your closing cash will reduce by 8 lakh? Give me a why. If closing cash reduces by 8 lakh, overall net assets will reduce by 8 lakh. Give me a why. Overall assets will reduce by 8 lakh. Are you comfortable with what I have done? Take your time. 1 crore 15 lakh 51,000 was my net assets. Can I say from that 8 lakh rupees cash is going to go out? So can I say your assets will drop and the numerator will be your new net assets divided by 10 lakh. Can I say your NAV comes to 10.75? It was earlier 11 point something. Now it has dropped to 10.75 because assets only reduced by 8 lakh. Give me a Y on chat box. Understood this? Students, please help me understand whether you're understanding. If yes, then yes. If no, then ask the doubt. All clear? 1 crore 15 lakh 51,000 were your assets. In that, can I say 10 lakh 51,000 was cash, but the cash is going to drop by 8 lakhs. So overall assets will drop by 8 lakhs, and this is your revised NAV. Now let's see if you're able to understand one more thing I'm going to do in front of you. Look at the screen. I'll keep quiet. Figure out. One line answer. Anyone in the class understood this? Understood everybody? So I'll now put one word and I think you'll understand. Check this. Did you understand that 11.55 was like a cum dividend NAV, cumulative of dividend, minus 0.8 dividend? Can I say that it will become X dividend? Simple. Pakka, no? Clear? If Pakka, give me PAKKA on chat box. Enough of Y now. PAKKA, please. Just for time pass. Sure? Okay. So please copy this last part down. Is everyone done? Okay, can I go to the next one? Everyone is requested to read another question which comes very frequently in the exam. Question number 19. Please start reading the question. I have a question. Would you be able to try this? You remember how we had done Cinderella? This one, you remember this one? Same thing. Can you try it on your own? Point number A. There are no external liabilities, okay? Chalo, start. Wow. Nidhi and Gaurav, you did it on calculator na just now? Okay, okay. Uh, do it in fair now, okay, in the notebook only. Answer is right. And yeah, answer is correct. Now in fair, everyone please. Is everyone done? Anybody wants me to W? No one. So I'll start then. Okay. Now comes a tricky thing. Everyone read point B carefully. Once you're done reading point B, type B on chat box. So there is an HNI called Mr. X. He sends 50 lakh to the fund. Look at me. Can I say he sends 50 lakh? Hey, can I say the mutual fund will have to issue some units to him? Come on, everybody. Everyone following? Can you tell me how many units? It will be 50 lakh divided by, just now you calculated 119.05. I hope everyone is able to understand. Yes, 42,000 units will be issued to this particular Mr. X. Now his 50 lakh will, can I say, add on to the fund? Everyone following, no? Now, where does it go? The fund manager purchases 18,000 shares of C. Can you tell me how much money will be required to do this? Exact number, please. For 18,000 shares of C, if you are purchasing, can I say 40? How much? 47, 59. Thank you so much. 200 rupees out of 50 lakh will be used to purchase C. How much is balance, please? 2,40,800. Can someone tell me what will the mutual fund do with this balance? Held in banks, na? Basically, it will be cash. Is everyone clear? And I also hope you realize that C will now go to 28,000 shares. Clear? From 10,000 to 28,000 shares. And number of units will go to 8,42,000. Give me a Y. Understood all calculation? Okay. I will repeat it. Be with me. Be with me. Students, give me a yes for this. Okay. Now I'm just keeping quiet. You look at this carefully. 50 lakh rupees taken now from Mr. X. Give me a Y. Okay. Copy this much down. Done? Anybody wants me to wait? Okay. Students, look at the screen. Nothing happens to share A, nothing happens to share B, something happens to share C. Give me a Y. Okay. Nothing happens to D, nothing happens to E, something happens to cash. Give me a Y. And then can I say something happens to the number of units? Give me a Y. And your NAV continues to remain what it was earlier. Nothing will change, no, because 50 lakh both sides. On one side assets increased, other side units were distributed at the same NAV. Can I say the net asset value per unit remained same? Hey, you are filling that market value table also, na? I am right now keeping it empty. You all are filling it up, no, everyone? Okay. Sir, but actual shares issued in 18,000 units only. No, I did not understand this. Can you be a little bit more clear? Are you saying that for that he gave 50 lakh rupees, but out of 50 lakh, everything was not utilized, so we should give him less number of units, something like that? No, no, no. Like that will not happen. No, he is giving 50 lakhs. Mutual fund has decided to not use something that is mutual fund's lookout. Now, why should he suffer for it? Mutual fund is giving that cash back to Mr. X. No, no, it is kept with the mutual fund only. So the assets have grown by 50 lakhs. Pankaj, understood? And Mr. X will not know also what they are doing with the 50 lakhs. He has given 50 lakhs when the NAV was 119.05. He's entitled to 42,000 units. Game over, like that. Is everyone done? Anybody wants me to W? Okay. Purujit, from where you got 52,000? What calculation did you do? Number of shares are 18,000, 42,000 are units of mutual fund. What are you doing? Baap re. Understood, Purujit? The 42,000 units were issued by the mutual fund to Mr. X. That is different story. His money they took and purchased 18,000 shares of Sino. Clear na? Pakka? That 42,000 C is reflecting down there in number of units. Okay, is everyone done? No? Now, everyone read point number C in your textbooks, please. And can you tell me what are they asking you to do? Time pass now. Point number C. Point number C, students, they are asking you to recalculate NAV and the market prices have changed on the other day. Look at the screen. Can I say same table you have to make? Only the MPS column will change and accordingly things will change. Give me a why. You understood this? Only the MPS column is changing, everything else remains same. I request everybody to start doing it on your own. Point number C. Nothing else changes. Cash, everything remains same. Yes. Student, very good. Rajarushi, Samira, Nidhi, very good. Are you getting these numbers, everyone? Chalo. So students, with that we finish the discussion to this question and we go to one last question, that is question 20. तो अपना ये भी मॉडल खत्म हो जाएगा. चलो फटाफट इसको कर डालते हैं. क्वेश्चन नंबर 20. रीड इट केयरफुली. Let me know once you're done reading. Ready? Okay. Students, if you all have read the whole question, if I ask you to calculate NAV on 30th of April 2012, okay, on this ending date, it's only a month since it was launched. Everyone clear? In 1 month, all of this happened. 1 month of April, I guess, correct? Students, in NAV, what will happen? Market value of assets. If you people have noticed, in assets, there are only two things. Shares are there and cash is there. Give me a yes. Nothing else is there in the whole question. And when we talk about external liabilities, there is some management expense in arrears, correct? So there is some outstanding management expense. That much is there. And that should give you your net assets. Everyone give me a yes. Understood till here? Okay. Now, as far as shares is concerned, one line answer they have already given to us, 198 lakh. You know now what is this 198 lakh? They bought shares, they sold shares, they again bought shares. Final, whatever was there with you, the total market value of the entire portfolio is 198 lakh. Give me a yes if you understood 198 lakh. Now I want to tell you, if you're smart enough, the whole question is only about calculation of cash. Give me why. Understood? We have to only focusing on calculation of cash, nothing else. So students, let's talk cash. Okay, let's talk cash. What all happened? One by one. ABC Mutual Fund issued 20 lakh units at 10. Can I say 200 lakh came in? Give me why. Initial expenses were 12 lakh. Can I say 12 lakh went out? Give me why. It invested the fund in shares to build a portfolio of 185 lakh. It is like that 98 lakh of the previous to previous question, if you remember. 185 lakh went out. Give me a why. Went out means we converted into shares. During the month, it disposed of some of the instruments costing 60 for 63 lakh. I don't care. Can I say plus 63 lakh? Give me a Y. Profit loss doesn't matter. Can I say for me cash came in 63 lakhs? Then I use that money to buy more securities worth 56 lakh. My 56 lakh goes out. Give me a Y. Till here, any doubt, please ask. Nobody. Fund management expenses, another expense, were 8 lakh, of which 10% were in arrears. 7.2 goes out. Give me a Y. Because can I say in this month, the cash that went out was only 90% of 8 lakh. And the 10% which is yet to be paid, give me a Y. Everyone clear? There is going to be this outstanding liability, no? So that is the bifurcation of your 8 lakhs. Next. Now comes one point which is slightly tricky. Okay, first of all, they are saying the fund earned dividends of 2 lakh. Add 2 lakh. Give me a Y. You remember one question was there where they earned 12 lakh rupees dividend and then 3 types of interest. Like that here they are earning 2 lakh rupees dividend. So can I think cash the 2 lakh will add? Hey, everyone following, no? Okay. Now, students, it is saying after that it distributed 80% of realized earnings. Can I say they are talking about the dividends given to mutual fund unit holders? Everyone there? They are basically distributing dividend. If you people remember, similar thing happened here also, no? This distribution of dividend. This is not dividend from shares they're talking about. Huh? They're talking about the dividends that they're going to distribute as a mutual fund to the unit holders. It's an outflow. Everyone give me a yes. Understood? You remember here there was a 8 lakh rupees outflow in this question. Like that here there is going to be some kind of outflow. However, they did not tell you exactly how much dividend they are distributing. They said dividend will be distributed to the unit holders out of whatever earnings we realized. I told you on day one also. Whatever earnings the mutual fund realizes, from that only it will give now to the unit holders. Everyone give me why. However, students make a mistake. They say, okay, sir, 2 lakh rupees dividend we got, 80% we distributed. One mistake you did. Your realized earning is not 2 lakh, but instead it is 2 lakh plus 3 lakh. Sana, very good. Students, everyone understood what I'm trying to explain? First day I told you, no? Realized capital gain is also an earning that is considered for the purpose of payment of dividend. So actually the total realized earning you have is 5 lakh. Give me a yo on chat box if you understood this. Realized earning is 5 lakh, 5 lakh, 5 lakh. Everyone, please participate. Request star. Okay. So can I say out? If anyone wants me to clarify some doubt, please ask. Because I'm not seeing your faces. No, I'm not able to understand. But presumably, since nobody is asking, I'll assume you have understood. Okay, no? But if you ask anytime, I'll explain. So 5 lakh rupees realized earning, 2 lakh it got from dividends and 3 lakh it got from capital gains. Total 5 lakh realized earning. Out of that 80% it distributed. Hey, can I say 4 lakh will subtract from here? Everybody clear with this? 4 lakh will subtract from here. 5 lakh into 80%. Can someone now do the math and tell me how much is the closing cash balance? Closing cash balance comes to rupees 80,000. Got it, everybody? Closing cash balance rupees 80,000. That 80,000 students, I will write it as 0.8 lakh here. And can I say my net asset eventually comes to 198 lakh. This 198 lakh, can I say I will divide by number of units? Number of units are 20 lakh. Can you please tell me how much is NAV at the end of the month? 9.9. Everyone got it? So can I place it like this, that NAV 0 was 10. Come on, be with me. NAV 1 fell to 9.9 and the dividend they distributed. Students, do you remember they distributed 4 lakh rupees dividend to 20 lakh units? Can you please tell me how much was the dividend per unit distributed? 0.4 lakh rupees. 4 lakh rupees dividend, remember na, 5 lakh into 80%. 4 lakh rupees dividend distributed to 20 lakh units. Dividend per unit comes to how much? Please help, no? 0.2. 0.2. Everybody getting it? Now that you all have understood this, read the last line. They are saying that there is this Mr. Akash who purchased 100 units at the start. Can I say his investment value will be considered as 1000? Give me a yes. 10 rupees, na? 10 rupees per unit into 100. Can I say his investment value is rupees 1000? Students not understanding. Upon 1000. Sir, what are you doing? Hey, they are asking you annual rate. Remember module 1. So 1000 is the investment value. Are you smart enough to understand 990 is the value of the investment at the end of the period? And do you realize 20 is the dividend that he will get? Give me a yes on this, please. Into 100 if I do, can I say I'll get a percentage return for only 1 month? I'll have to do into 1 by 12. Give me a yes. I'm so sorry. I'm so sorry. Into 12 by 1. Please give me a yes. Did you understand? Because this return is only for 1 month, no? So for 12 months, how much annualized? No need to explain this, no, students. One full module is done. You could have, students, also found out this percentage as simply you could have done on per unit also, no? 9.9 minus 10 plus 0.2 upon 10 into 12 by 1. Same answer you will get. Everyone give me a Y. This I am doing on the total basis of 100 units. You could have done on per unit also. See, when it is a normal dividend plan, no, whether I do it on total or whether I do it on per unit, doesn't matter. It is only dividend reinvestment, na, in that the per unit becomes locked. I have to do it like this. Give me a Y. You understood this? Only in per unit. Okay. So students, I think you understood this whole question correctly, no? There was, just look at the NAV, how I got it. Shares market value given. Cash, can I say we did full hard work. And one outstanding. Can I say that gave you net assets divided by number of units will give you NAV at the end of the month. NAV at the beginning, NAV at the end, dividend, everything you had to calculate annual return. So even though students, this was a calculation, this was a question based on the calculation of rate of return to investor, I still did not put it in module 1. I put it in module 2. I hope you understood why. Because even though the question is like module 1, but the calculations, can I say you have to first find the NAV, which is why I put it in module 2 there. Everyone. Similarly, you would have noticed, you remember this question? I'll tell you which one. Question number 7. You remember today morning we did this question? You remember 153.33 and all this, 3 NAVs. Now you see, even though these were calculations of NAV, I did not put it in module 2. I put it in module 1 because it is all module 1 concept that is applied to calculate NAV, like that. So you see, I'm not blindly just making anything. Lot of thought is given behind the moduling as to what is the solution and what need is there, and accordingly I have put it. Somebody else would have, what is the NAV? Module 2, a calculation of NAV. It is not like that. You have to be very careful. Similarly, this question also, They have not asked you NAV. They just asked you how much is the annual rate of earning. Oh, module one. No, 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 no. Somebody who has taught for 16 years now knows that even though module one thing is there, but actually students will learn all this properly in module two. See, this module thing also, basically it is in my head only. There is ICEI has not told you modules and all. Concepts basically. You understood now how I have bifurcated the chapter accordingly. Students, are you able to are you comfortable with how the chapter is bifurcated, etc.? All clear? You are comfortable with how the sums have been put. All ICI universe has been put here. You now know all different types of sums which have ever been asked. Only thing you have to do now is come regularly to class and please do practice plus. I request you. Otherwise that book 90 plus becomes useless. You have to do practice plus. In a separate notebook. Do it on your own first. You have to try it. Don't see the solution and then try. No, no, no. Useless. Try it on your own. Make mistakes and mark the mistakes. I'm telling you, it will change your life. Okay. So I thank you very much. Students, tomorrow we should be ending with mutual funds chapter. And if time permits, we will start a humongous chapter called as portfolio management. One of the most dreaded chapters of final CA, a chapter which many final CA teachers even refuse to teach. I'm telling you openly. It's a chapter which people don't teach because it is too much of statistics, this and that. But students, I'm not one of those. I will give you full clarity about everything, what is there in the syllabus. Okay. Even though maths is there, we will go into maths. No problem. Everyone clear? My request is two things. Please inform your friends to come and join. It's a brand new chapter. From there, they can enter AFM. Mutual fund was an independent chapter, doesn't have connection with it. Those who want to join, you know which phone numbers to call. Okay, you can call on those numbers. And last thing, please ensure you have your textbook, because from next chapter onwards, I will not be able to share PDF. Max I can do is I'll ask you to take screenshots from the screen of the whole question. That is why requesting all to please take the PDF as soon as possible. I am to take the hard copy as soon as possible. Thank you so much. Take care. I'll see you tomorrow. Bye bye. See you. Today's lecture clear na everyone? Thank you. Thank you. Bye bye. Thank you. Have a great day.